Hello, I'm Jane Hanlon, Mortgage Club Manager for Wise, but I'm sure you all know me now, and welcome to today's Ask Jane. Today we'll consider buy-to-let and second homes within our market. Buy-to-let and second homes are not lifetime as defined by the FCA. However, we'll start with the buy-to-let. It's very, very similar to the lifetime mortgages in offering a fixed rate, no negative equity, and you do require independent legal advice. You have to be over the age of 55 for the buy-to-let, and it's with Canada Life. It's for people that have inherited a house and want to put it to alternative use, or perhaps you've owned it and transferring it to a buy-to-let, or perhaps you're a buy-to-let and have small portfolios up to 6 million can be considered, any number of houses that you're looking to transfer onto a sort of lifetime sort of style arrangement. It cannot be used for purchase. So you have to have a tenant in the property under an ASU, which is an assured short-term tenancy. So in other words, you can't live in it, and neither can your family or your family of your clients. Otherwise, it's classed as a regulated loan. The usual costs of setting up, which is a valuation fee if applicable, advice fee, solicitor's fees, and the lender's arrangement fee if applicable. So remember, it has to be on an assured short hold tenancy in place, and they're normally for 6 months. The products that are available with Canada Life, and they are the only lender now that will consider this, it's the lifestyle range, which is pure roll-up, and the voluntary, which is ideal for this sort of product, which is basically ad hoc payments. You can pay by standing order, check, backs, and you can obviously chop and change them. Payments need to be from £50 a month up to 10%, and is absolutely excellent for the times when you have no tenants. Even more importantly, it comes with fixed early redemption penalties, so they're over an 8-year period. So the first 5 years is 5%, years 6 to 8 is 3%. So it gives you flexibility as well should things change. Who might use this product? Well, it's for landlords unlocking cash because they want lump sums, perhaps to buy more property, perhaps to share the load, inheritance tax planning, that sort of thing. Landlords who no longer want to pay monthly payments because you've obviously got an option and more flexibility, certainly in times when tenants aren't paying their rent due to COVID, have been given a window. And we've got owners that are moving out and looking to change. Perhaps they're going to go and live with family, perhaps they're going into a care home. But again, you would need a tenant in before the application on an IST. These funds can be used then for release to pay for your care fees, whether it be with your family or in a care home. You get the lump sum, obviously, as the initial payment. It is only lump sum, it doesn't come with a reserve. But don't forget, you would also get the monthly income coming in from the rent. So the case will be assessed as normal with evaluation, but the surveyor is actually asked to specify the monthly income, just like any normal buy-to-let, ensuring that the rental income meets the acceptable industry levels. The club is starting to see this option more and more as families are starting to form bubbles. We're starting to see people move in with families and releasing funds, so the younger generation can then in due course extend their property using the funds from the buy-to-let to support the older generation, and sometimes using respite. So there's a real mix rather than people going into care homes. So you've got a nice lump sum regular income whilst retaining the family home. The debt only needs to be repaid on death within the time limits allowed within the scheme, so that families can decide of what options to sell or refinance. So it's a new innovative product, slightly different, and we are seeing more and more people looking to use that route. Now we move on to second homes. Again with Canada Life, This summer, we've seen an increase in inquiries, possibly because of COVID, possibly they want a garden, home working, semi-retirement. We are seeing semi-retirement in our industry, funnily enough, older people realising they can work from home and work less hours. It's very similar to the buy-to-let with a fixed rate, no negative equity, and again, you need independent legal advice. The eligibility now. The owner must use it for a minimum of 4 weeks per year. And if they ever let it out no more than 4 weeks at any one time, that's due to a legal position over tenants' rights. And the other considerations that Canada Life will look at is the advertisement, not too heavy. So it's a more softer approach. And they also check any formal tenancies. Again, the schemes are like the buy-to-let with the lifestyle roll-up and the voluntary ad hoc with the standing orders, backs, checks, payments, £50 to 10%. So it can be a capital and interest. It comes with the same redemption penalties, 0 to 5%, 5 years is 5%, 6 to 8 years is 3%. So who would use this? Well, again, you have to be over 55, but this time you can use it as a purchase. What we are seeing with COVID, that the city people want country, seaside or close to family. And what you can do, and we're starting to see, is what we call a dual arrangement. They're starting to raise money on their main residence using equity release or other forms, and using that as a deposit to put down for the second home with Canada Life and raise additional money to cover any shortfall, preferably on a standard construction property within reason. So if you live in a £1 million house and possibly take 200,000 mortgage on that, whether it be equity release or mortgage or lifetime, and then use the 200 as a deposit and cover any shortfall like the 50,000 on your second home. This means you can service the interest or not. You can then sell the city home in due course, and depending on which scheme you've used, you may be able to pay without any redemption penalties, or if you have redemption penalties, obviously that needs to be given consideration when giving advice. You can also repay the second home after 8 years with no ERC. So it gives you another window in these changing times of needs and wants. You can upsize then, obviously, if you sold your main residence, and the list goes on. I think new options, creativity, and real flexibility for the city country dual living is ideal going forward. Buy-to-let is new within reason, and also second homes. It's not commonly used, but we are seeing more and more inquiries. So KFIs, just to let you know, they can be requested from our platform, and every time you request a KFI, we plant a tree. So I hope you enjoy using our platform, and I thank you for joining me today. Please keep your questions coming. You can email me or drop them on email or onto the platform, and I thank you for your time.